So when will the housing market crash in Florida? Is it a good time to buy a house in Florida? Wait, can I even afford a house right now? If you're confused about what's really happening in the housing market today, not really sure what your home is worth or if you should be buying a house right now, you're not alone. Today, we're going to walk through some key factors that are impacting the market right now and give you the down and dirty of where the housing market is going from here. So if you listened to the news last fall, Fortune was calling for 15 to 20% home price declines in 210 housing markets. Dallas Fed was also calling for a 20% drop in home values, etc. Oh my, you'd have thought that the sky was falling and you'd be racing in to jump in a hole with Chicken Little. I hope you avoided spending all this time with the chicken and would like to see what's really happening in the housing market today. So how much have prices declined? Are we seeing 20% home price depreciation? Well, a few of the West Coast markets that are heavy tech are definitely seeing depreciation, but they are all certainly not the national average. So when you're looking at year-over-year home price appreciation, this chart of the top 20 metros, it's evident that those markets that are showing depreciation are in the West. And according to Salma Hepp from CoreLogic, declines in the West are due to the tech industry slowdown and a severe lack of affordability. So we're going to dig into affordability in just a minute. But as we look at how the South Atlantic region fared, it is by far the most positive growth, showing 9.6% for January year over year. And so when you compare that to the national rate of appreciation at 5.3%, that's pretty impressive. So it's also important to see that the Pacific region was the only one to not show appreciation from January 22 to January 23. So let's take a look at month-over-month changes in home values. Have home value declines stabilized? Well, this chart with the main two sources of info, the Case-Shiller and the FHFA, show that we started off with great appreciation in 2022. And in the middle of the year, among rising interest rates, we started to see the shift. And depreciation in both these charts kind of show that the depreciation has stabilized after it peaked in the fall. Well, the proof is right there. Home prices are not in a free fall in this country. And this chart doesn't show the February numbers that just came in, which according to Case-Shiller show February 2023 breaking the 7 months of consecutive declines and posting an increase in home values month over month. FHFA also showed an increase in prices over January 2023. So faced with the facts, the majors have changed their tune. Black Knight reports home prices down 2.6% from their 2022 peak. Moody Analytics says repeat sales in homes, our price index, is down 2% from June 2022 peak. Freddie Mac reported that the national home price index is down 2.5% from its June 2022 peak. So, well, I guess you can say that they all have a 2 in their number, but it sure is a far cry from 20%. So I think one can safely say that the media headlines today are there to terrify and not clarify. And if you're to look at a chart from the FHFA, which shows 4-quarter appreciations as of the end of fourth quarter 2022, you'll see fairly positive view of home prices across the US. This is a great graph to dig into when you have a little time. And again, it shows some struggles in the heavy tech areas in California. But when we look at Florida, specifically, it shows 0% appreciation in fourth quarter and 15.2% appreciation for the year of 2022. And when you look at that Naples and Marco Island, it shows an appreciation of 1.55% in fourth quarter 2022 and over 18% appreciation for 2022 in total, with a peak in second quarter of the year. So now you know where home prices are today, which is important whether you're a seller or a buyer. But for those of you looking to buy a home in 2023, affordability is your new buzzword. And you're likely wondering, will it improve this year? So let's discuss what makes up affordability so that we can answer that question. Affordability is a combination of 3 factors: prices, rates, and wages. So mortgage rates have been the key factor driving today's affordability. Back in 2009, 2015, home prices really ruled affordability. And it brought home prices to a much more affordable place with the big decline. But we're in a very different market right now, where it's largely based on mortgage rates and wages. So looking at these lines over to the right, we can see that affordability was really good in early 2022, but starting in May through November, it became more challenging for a family with a median income to qualify for a loan on a medium-priced home. So as you can see in this graph, the interest rates are dramatically impacting affordability. And that begs the question, where are interest rates headed from here? According to Greg McBride, chief financial analyst for Bankrate, the Fed continuing to raise short-term interest rates actually portends lower, not higher long-term interest rates, including mortgage rates. And the more the Fed raises the rates now, the less those bond investors are going to need to fret about inflation, and the greater the risk of a recession, when investors are stampeding into bonds. So to summarize, the turbulence in the financial markets is putting significant downward pressure on rates, which should benefit borrowers in the short term in 2023. According to Bankrate, even with the banking crisis complicating this outlook, many analysts think rates will dip back into the 5% range in 2023. So on to wages, and how are they impacting affordability today, which ultimately impacts your home value or lack thereof, right? So I like this graph, which looks at median household income versus qualifying income. And it's very telling as you look at the big red bar out west, which means someone with a median income can't afford a median priced home. The Northeast is challenging as well, but the Midwest and the South, yes, Florida, are still okay. So where are wages headed? Well, that is relative to your local economy, as we all know, and your governing bodies, it seems. I can speak to Florida, however, and Florida has job creation going for it, and not just low-wage work as in years past. Florida recovered jobs lost during the pandemic 10 months sooner than the nation did, according to Jerry Parrish, the chief economist for the state. Between March 2022 and March 2023, the Florida private sector grew by 389,000 jobs, or 4.7%, and unemployment is at 2.6% and has remained lower than the national average for the last 29 consecutive months. State leadership invested in our economy and has helped make Florida a great place to locate a business. If affordability is important to you, it's helpful to be in an area with solid job growth. So I'm going to leave you with a quote from Lawrence Yun from a private address that he made to a small gathering of realtors in Florida when he said, "Certain areas of the country, such as the West and Northeast, may struggle for a period of time to work through recessionary conditions, but Florida's job growth, over 7% since the pandemic, has insulated it in that people are moving to the state for jobs, and where there are jobs being created, people need housing." For a more detailed look at Naples, Southwest Florida's housing market, check out my next video. Thanks for joining me today. And if you liked what you saw, hit subscribe and watch more videos about the Florida housing market and our beautiful Southwest Florida so that you can love the way you live, Southwest Florida.